Hi guys, welcome back to high yield intraday trading. So today we are going to discuss about a very widely accepted way of trading, and that's called averaging. Okay, now to give you a brief about averaging, why do actually people do averaging is because they think that they can minimize their losses if the stock goes in the opposite direction than what they thought of. Well, having that said, it actually holds good in some scenarios and really bad in other scenarios. Okay, now the question comes in, is it the right way to trade? Can you really decrease your losses by averaging out, or is averaging the best way to decrease your losses, or even should you actually be doing it? Okay, now having these questions asked and having them in mind, let me get on to an example of averaging. Okay, so this is a presentation that I have prepared with respect to averaging. Okay, now getting on to the first candle. Now the first candle is a pretty big red candle, which means that the stock is falling big time, right? This is a 5-minute chart, guys. Okay, so the second candle is also red, okay, which means the stock is going down further. Okay, now the third candle is a quite big green candle. Now it won't be wrong on a day trader's perspective to think that the stock price might go up from here, okay, because it has faced such a big fall. So it should be a normal scenario wherein the stock will try retracing for a bit. Okay, now having that thought in mind, okay, hoping that, what we do here is we go long at this blue line. Okay, now coming to the stock is absolutely for example purpose. Okay, so the share price we are considering here is 2000, and the number of shares that we have bought are 100. Okay, so we go long at this first blue line, okay, and we buy 100 shares. Okay, now what happens? The stock goes up for a while, okay, and then to our surprise it starts falling after that. Okay, now let's say that the stock has fallen for 20 rupees from the point from where we have gone long. Okay, now for a 2000 rupees stock, it is not a big deal to come down for 20 rupees, right? So at the second blue line, the share price has dropped by 20 rupees. Okay, so the present share price right now is 1980 rupees, and the number of stocks that we hold with us is 100. Okay, so what is the loss that we have faced till now? It is 2000 rupees, right? Now at this point of time, we have two options. The first option is either we come out with that 2000 of loss, okay, and the second option is we go ahead and average it out. Now how do we average it out? We go ahead and buy 100 more shares at this point. Okay, so averaging is all about it, guys. If you are thinking that a stock will go up, okay, and you bought n number of shares, okay, but the stock came down, so in order to average out, you will again buy some more number of stocks. That is the whole fundamental of averaging. It's simple mathematics, right? So these are the two options that we have right now. Okay, now coming on to the first scenario, you average out, okay, you buy 100 more shares. Now after that, the stock starts moving up. Okay, so let's say the stock moved up by another 10 points, right? So the cost of the share right now is 1990 rupees, right? And the number of shares that you hold right now is 200, right? Because 100 was our initial quantity and we added 100 more to average out, right? So the total number of shares that we have with us right now is 200. Okay, so what will be the position of ours? We will be in a position wherein we are cost to cost right now, right? We are neither in profit nor in loss. So the only thing that we'll be paying right now is the brokerage charge. Okay, now this is a scenario wherein you average out and then the stock price starts moving in your direction. Okay, now coming to the second scenario, okay, wherein you average out but the stock still continue to go against you. Okay, so let's say at the third blue line the stock has fallen for another 10 points. Okay, so the initial share price was 2000, then it fell to 20 rupees, so the share price became 1980, and again it started falling for another 10 rupees. So right now the share price is 1970 rupees. Okay, now before the stock price reaches this blue line, if you remember, we had gone ahead and averaged it out. Okay, so right now the number of shares that we have in our hand are 200. Okay, so what is the position of ours right now? We are in a loss of 4,000 rupees. Okay, so now let's get back to the initial loss here. Okay, if we see the initial loss, the loss which we were facing was 2,000. Okay, now because we averaged, and even after averaging the share kept falling. Okay, that means it went against our expected direction. Okay, so our loss increased to 4,000 rupees. Now if the share keeps falling, will you dare to go ahead and keep averaging out again? That is something which you need to think and answer yourselves. Okay, so seeing at the example, guys, I hope you all have understood what is the point I'm trying to make here. Okay, the point is you are taking a risk where either you are taking a chance of coming out cost to cost or even in profit, which will be good, obviously. Okay, if you are coming out in a cost to cost or in profit. Okay, and also a risk of going more into the losses. Okay, so the decision is yours, guys, because this topic is a never-ending topic, a never-ending discussion. Yeah, now coming to my personal view, I never average out in day trading. Okay, in intraday trading I never average out. I would prefer coming out in a loss depending on my initial investment or the number of shares that I have bought initially. Okay, I really do not want to end up in a situation where I will get trapped so badly that even if I find a better opportunity or a better movement in any other script, I really have to struggle hard to get out of my losses. Okay, so this is my perspective. This is purely what I do and purely what I think about averaging. Okay, so having that said, it's time for you guys to decide which way you want to be, but in whatever way you want to be, I will always hope that you guys should be in the profitable side. Okay, so that's it, guys. This is what I wanted to discuss with you. Just thought of sharing this thing with you all so that the people out there can take the right stand for their trades and should never get trapped in the wrong trades. Okay, because the averaging funda is becoming common day after day. You can see a lot of people averaging out their positions. Okay, so it has both things. It has a pros, it has a cons. Okay, so you have to be very much aware about what good can happen and what bad can happen if you average out. Okay, so hope this is some helpful info that I have shared with you guys. So that's it, guys. That's all I have it for now. Please do like, subscribe, join my Discord channel for more actions. You can go to my website and click on the Discord icon over there. Let me just show you real quick. Just a moment. Where did it go? Hold on, please. Okay, let me drag it up. Just a moment, please. Okay, this is hi. Alright, so if you see here, you go to any page here, you will just a moment. Yeah, you go to any page here, you will find join HYIT Discord icon over here. You can just click on it. It will redirect you to a page which will ask you for your name, email address, mobile number, and your Discord ID. Please make sure to type in your full Discord ID, which is in a format of ID, then a hash, and then 4 numbers. Okay, once that is done, you can click on send. That will fire a mail to the High Yield Tradings inbox, and after that we will do the needful. All right, so that's it for now, guys. This is what I wanted to share with you. Have a thought about it, think, and then act. All right, thank you so much for all your time, guys. Thank you so much. You have a good night. Bye bye.